Hello guys, it's Max here from Daily Market Movements. Today it is the 10th of October 2021, which means it is Sunday. So we have a whole trading week on the horizon, and I'm just going to go through the gold, Nasdaq100, S&P 500, crude oil and Euro US dollar charts with you. So I'm going to share with you my thoughts as to where I believe that the markets are heading this week. And of course guys, just to start off today's video, I just want to make you all aware that this is not financial advice. I'm just sharing my own opinion with you guys, so I'm not telling you to copy it, but if you do wish to copy it, that is down to you. Also, just want to start by saying a huge thank you to everyone who joined my Signal team, where I share my trades. We had a record number of you joining up over the weekend since I posted that video on Friday after a very successful week last week. So thank you very much and welcome to the team. And if you haven't yet joined the team, then you can head over to my website, dailymarketmovements.com. I've left the website link in the bottom of this video's description, which will take you to this page here. And I charge a very small fee of £249 for a year's membership. So let's kick off today's video with the gold market. So gold, where were we trading? So we did have that massive spike during Friday's session. We went and tested that 50-day EMA. And I don't know if you have memories of me saying, but I said if we break above the 50-day EMA, then that would be very bullish for the gold markets. And that's what I was looking to see, whether we could get that daily close above the 50-day. But, you know, for those who've been watching my videos for some time now, you'll know that I'm extremely bearish for the gold markets. I think we're heading down to at least 1700 and potentially down towards 1680. And, you know, personally speaking, I think that we will get a further breakdown lower, perhaps down towards the 1500 level as we go into the beginning of 2022. So what happened on Friday? Well, we had a complete turnaround, and we're now trading below the 23% level on this fib chart, which is very bearish. That's this red zone that you can see here. And, you know, typically speaking, when we have been trading within this red zone, we have gone and tested that 1680 area on 3 separate occasions. So, you know, personally, I think that we are heading lower. I know that many of my viewers are bullish on gold. You hold gold in your portfolios, and that's absolutely fine. I'm just sharing my opinion, and if you think otherwise, well, then that's great. It would be great to hear your arguments in the comment section of this video. But, you know, going into this week, I'm looking for a further breakdown in the gold markets. Perhaps we go and challenge that 1723 bottom. So I'm going to go ahead and put a rectangle box here. This is where I'm wanting the gold markets to target this week, and go ahead and save this chart, so on Wednesday I can give you an update to see whether we have hit it, because we are still trading now within this downtrend. We had a false breakout towards the 50-day EMA, but we've been rejected there, and that of course is bearish. We haven't broken above that resistance area up at the 23% level on the fib chart, and we're now trading below that area, which means that, you know, we should really go and target that supportive area down at 1680. So bearish on the gold markets going into this week, and 1720, which was the previous swing low, is my target. Let's head over towards the Nasdaq100. Now, for those who've been watching my videos last week, you know that I sent a fantastic buy signal when we bounced off this uptrend. I sent the buy signal at that 14400 area, so I pretty much cherry picked the bottom. I'm very proud of myself. I don't always cherry pick the bottom. It's always a lot harder to pick the bottoms than it is to pick the tops. But there, I will, you know, give myself credit. I really did put in a fantastic signal there for my Signal team, and we have profited significantly this week. And you know, we bounced, and we bounced directly off that uptrend line, and we've gone straight towards a 50-day EMA. Now, what I'm looking for here is whether we can break above that 50-day EMA. We went and tested it on Friday's trading session. We had we had a very poor jobs number come out, which of course is good for stocks, because it means that, you know, potentially it might mean that the Fed may pause the tapering process, or commence it 1 month later, because it's heavily expected that will begin in November, but they may push it back by a month. But personally, I think that it will go ahead in November. The US economy is it's doing very well, so I don't really think it changes much, and that's why we saw the Nasdaq100 rollover going into the close. But you know, there's been some very choppy trading, and that's all to do with the 10-year yield rising, especially for the Nasdaq100. The Nasdaq100 has been the indice that has been the worst hit over the past couple of weeks, and that's because that 10-year yield, which basically basically forecasts when the interest rates are expected to be hiked, and with it spiking from 1.2 all the way up to 1.7% in the past couple of weeks, that tells you one thing. That tells you that investors are anticipating interest rates to be hiked before the beginning of 2023, so going into the end of 2022, which of course is next year. And that has been bearish on these big high growth stocks which have extremely high valuations, and their earnings are projected 5-10 years in the future from now. And of course, with the hiking of interest rates at an earlier date, well, that just means investors have to now go and recalculate the future cash flows of these companies, which of course is going to be lower. So that's why the Nasdaq100 has been struggling the past couple of weeks, but I think eventually we break above the 50-day EMA. That's what I'm looking for this week. I'm seeing whether we can break above that 50-day EMA and go and target the all-time high, which is roughly about 5% from this current level. So I'm very, very bullish here for the Nasdaq100. I'm a buyer, as you all know. I bought down there, and it's still not too late. It still offers, if you were to buy now and you put a stop loss just below the bottom of this uptrend, well then you're risking 2.87% to gain a potential 6%. So that's a fantastic 2-for-1 risk reward ratio here in the Nasdaq100. But I'm going to stick with my current trade that I have open, which is that where I've got 9% towards the upside, and I'm risking 3.78%. So bullish for the Nasdaq100 going into this week. On Wednesday, I really want to see us trading above that 50-day EMA. Moving over to the S&P500, very similar. We're testing that 50-day EMA. I bought the S&P 500 on Friday. I'm currently targeting the top. So I've got 4% towards the upside, with me risking 2.54% towards the downside. So a slightly better risk reward ratio there. Risking less than I could potentially gain. One thing I do like about the S&P 500 is that the RSI is below that 50 area, that midway point, so we still got plenty of room to run towards the upside before we are considered to be overbought. So the S&P 500 has struggled over the past couple of weeks, not as much as the Nasdaq 100 because it does have a lot of value stocks within the index, but of course its biggest stock in the S&P 500 is Apple, and Apple is a massive growth stock. And if interest rates were to be hiked earlier than expected, Apple is one of the companies that would get hurt. So the big tech stocks dragging down the S&P 500 over the past couple of weeks, but nevertheless I'm still bullish. I think that we do break above it. We just need to break above the 50-day EMA, which we didn't do on Friday. So I'm looking for that, but very, very bullish indeed going into this new week. Moving over to the crude oil markets. Now the crude oil market's very interesting indeed. We've been rejected from the $80 barrel price. It sent us all the way down towards $75 a barrel. I was a buyer down here. Again, I cherry picked the markets. I cherry picked the bottom of this market. I think it was Wednesday or Thursday. I sent a signal out to the signal team. So well done to everyone who managed to profit on that trade, and then that shot us all the way back up towards $80 a barrel, and we haven't quite broken above that $80 level. It's a large psychological figure, so of course it's going to come with some sort of resistance, but one thing I do not find attractive here in the crude oil markets is the RSI. We're currently at 70, which tells us that we're overbought in the short run. So again, I'm looking for that pullback. I don't currently have any positions open in the crude oil markets. I'm waiting for that pullback at least to that 1% level on that Fibonacci chart, where I can then potentially start to add small positions. And if we break down lower, I can add down at the 78% level, where we have been rejected back in the end of July 2021, and that could potentially become the new floor in this market, or the short-term floor, I should say. So I'm currently going to be waiting on the sidelines patiently for a fantastic buying opportunity down lower, but at this moment in time, the risk-reward ratio is, it's not attractive at all. And, if I was to buy here, I don't really see much more upside from this current level in the short term due to the RSI being overbought. So then you're risking a massive fall, perhaps even down towards the 50-day EMA, which is down at $72 a barrel. So patience is the key here for the crude oil markets, looking for that dip to take advantage of. Moving over to the last but not least, the euro US dollar. Again, we've broken below that supportive area where we bounced on the 3rd of November 2020 and the 24th of September 2020. So it'll be very interesting to see whether we can break back above that supportive area. I personally believe that we will in the coming weeks. It's just because the 10-year yield is rising. The US dollar has gained some strength in the short term, but I think that this will wear off, and we will see the euro, become a lot stronger against the US dollar. One thing that I do like for the bears here for the euro US dollar is that crossover. We've had that bearish crossover with the 50-day EMA piercing below the 200. That's, basically tells me that medium to long term this chart is now bearish. But on the flip side, the fundamentals, I cannot ignore the fundamentals. The fundamentals are screaming at me saying that the euro should be a lot more better than the US dollar in a medium to longer run. So I am bullish. I don't have any positions open at this moment in time. I'm waiting for that bounce. It might be that we go a bit lower down towards that 50% area on the fib chart. We get that bounce, which then sends us back above that 38% level, where I've drawn this Fibonacci chart. Obviously, this is an upward pointing fib chart, not a downwards one, so that's why the percentages are flipped. But I am bullish. And also, one thing I really like about the euro US dollar is that we are considered to be oversold. So again, I wouldn't be selling significant amounts of this currency at these low levels, because the RSI is telling us that we are a little bit overdone towards the downside. We've been pretty much declining now since the 27th of May. So the past 4.5-5 months we've been moving towards the downside. So I do believe a bounce is in the cards for this currency pair. I'm going to wrap it up with that. Guys, make it short and sweet for this this pre-week video. Again, if you are wanting to trade alongside me and copy my trades, then please do not hesitate to go and visit my website, www.dailymarketmovements.com. that will take you to this website here. The link is in the description of this video, as I mentioned at the start of this video, and I charge a very small fee of £249, which is nothing. That's one good trade, and you can pay that off in no time. So check out the website. It might be for you, it might not be, but it doesn't cost anything to go and check it out. So thank you guys for tuning in for this video. If you're new to this channel, then please give us a subscribe and a like, and I'll see you all on Wednesday with our midweek update. Thank you.